Hi, our Monday Q&A again. Good to see you guys, and I hope it's another amazing start of the week. Of course, this weekend I had a bit of a busy but very great weekend. I was having my black belt martial arts grading. So today actually it's like the first day I claim myself as a black belt. How does it feel? Actually, because I was so tired over the weekend, and this morning, because I got a voice message which was very intimidating. I had a massive panic attack in the morning. Of course, the posts are a little bit slowed down, but then there's no reason why I stopped doing the Q&A. Of course, during the day, I did some meditation or just had a breathing. Just smooth out this, and now I'm fine. Really grateful for running a business, have this sort of flexibility that allow me to do these things, like when I have sort of panic attack or anything like this, allow me to really have a breather. And of course, due to the weekend, it's hard work, so there's no reason why I shouldn't slow down for today. But then I'm back, and I'm also back tomorrow. So let's do it. Okay, so today's topic is about dormant company, and is your business in sleeping mode? I think for most of business owners, if you're still running a business, perhaps this concept is not really familiar with you. But it's just due to currently like the IR35 hitting the public sector, and lots of NHS doctors, before they are working as a locum via the limited company. But then because of IR35 and the trust or the agency using the blanket approach, so push everyone into either PAYE or umbrella company. I think at the moment, it's just a little bit update and then overview my own personal opinion about this new legislation. Of course, the main purpose of this change was they want the public bodies like a trust or the agency to take reasonable care to assess their workers. But then I've heard like some of the trusts or some agencies, they just think they don't have time to assess every single worker, so that's why they just think they will employ everyone. So either they go umbrella company or go PAYE. Of course, in this blanket approach, the risk for the agency or the trust is, one thing is perhaps you will lose some workers because they might find work, like a locum work or the contractor work within the private sector, which is they can still use their limited company, get a gross pay, or they just it affect their take-home pay, and they might be disheartened, affect the quality of the work. And also as the agency or the public body, they themselves might facing some risks as well, because if you push these people like locums into umbrella company or PAYE, you tax them. For some, they still, you still pay them into their company, but deduct the tax as if they are employed, but they don't entitle any benefits. So you might have a risk that they're gonna come back to you. The workers will come back to you and claim these benefits. So of course, at the moment it's a bit chaotic, and we'll see how the things will develop. I'm sure overall, when the time comes, everything will be fine. Okay, but in the current circumstances, if you are one of them who is now shifted into umbrella company or PAYE, then your limited company is currently inactive. So there are some critical issues you might have, because your company is still open. As long as your company is still registered in the company's house, although it's inactive, it's just like your computer is in a sleeping mode. It doesn't mean it's like shut down completely. So you will still have some basic responsibilities for that company, even if that's inactive. Okay, first of all, Actually, we need to have some clarification about what defines as a dormant company, what defines that the company is inactive. And of course, dormant company, you have slightly less responsibilities. But what defines you, what makes you to qualify for this simplified responsibility? So first of all, dormant company is your company don't have any activity, no major transactions, apart from like minimal, you might have a bank account still open and your bank still charging your fee. But if you have any activities, even though you don't have any money coming in, but you still have a pile of cash sitting in and you're still running the payroll out of the company, your company is not dormant. It just means you don't have any sales coming in, but then you still have payroll costs coming out. So that is not a dormant company. You still have to file the full set of accounts and tax return and declare whatever standard company needs to declare. So really don't take a company inactive for granted in these circumstances. So in this situation, really talk to your accountants, like see what you need to do. But if you don't do anything, if you don't take any payroll and there's no expenses coming out from the company, then yeah, your company can be qualified as dormant. But then that doesn't mean you don't have to do anything regarding the company. Perhaps your accountant will still have to take some responsibilities for that dormant company. For instance, every limited company are required to file confirmation statements once a year. Okay, actually when it comes to confirmation statements, some people actually ask, what is confirmation statements? This is actually the new term, just come into, I think the first anniversary of confirmation statement actually is end of June this year. It's basically, I think if you've been running a limited company for a while, you know what is annual return. Basic confirmation statement is a replacement of that. The detail is very similar to annual return. It's basically the snapshot confirming who are the shareholders, who are the directors, your address. Just need to make sure all the information are up to date and are all correct. But then confirmation statement, one thing, of course the name is different. The other thing, they want you to declare the people of significant control. So this is not just simply who is the majority shareholder, who are the controlling party, which are the shareholders, the people who has more than 50% of the share in the company, but the person in significant control. So if, for instance, if you have someone holding more than 25% of the shares, then that person is a person of significant control. So in the confirmation statement, you do need to put the details of that person in there as well. So the basic information, the overall is very similar to previous annual return, and of course you need to pay company's house fee as well. If you file online, then that's £13, but if you file by paper, then you need to pay £40. So that's a rule. That's normally when your company is coming to the anniversary, then you have 14 days time to file that confirmation statement. So what if you forget, or what if you don't file the confirmation statement? Well, it's not like a company's accounts. If you don't file the confirmation statement, or if you're late, there's no penalty. For some people, probably if they are late, there's no harm. But then, of course, if you don't file that, it's your responsibility as a director to file that on time. And if you leave it for a while, then the company's house will assume your company is no longer trading. So they will automatically dissolve your company. So that will be the consequence. Okay, so if your company is dormant, you really don't take things for granted, then that is one of the things you need to be take care of. Okay, the other thing we mentioned about the company's accounts. So if your company is dormant, yes, of course there's no transactions, there's no activities, but you still need to file the dormant accounts. Basically, all these things are zero. You will still need to declare how much shares your company is holding and some basic information. The format is much simpler than the normal set of accounts, but then that is still something need to file. And it's just like a normal set of accounts. You need to file it within 9 months after the accounting period. In our last week's video, we shared that the timeline of corporation tax, actually Companies House deadline, is actually the same. Corporation tax, the only difference is corporation tax deadline had a +1 day, but the Companies House was exactly the end of the month, so 9 months exactly. Okay, so that's another consideration, another thing you cannot ignore. And even if your company is dormant, if you don't file that account, again, you will still get a late filing penalty. Okay, but the only difference is normally the full set of accounts, we need to declare the company tax as well. But the dormant company, the company tax is not required. But here again, something need to be careful. By law, it's not required. But if, like previously, if you had filed the corporation tax, it's better. You need to let the HMRC know that your company is now dormant. Then this is not required. If you don't let them know, they will assume your company is still active. And if you don't file the company tax, then they still issue the penalty. Of course, for most of my clients at the moment, or some people, if they previously say if they ignored or they sort of overlooked, then even if there's a penalty, we can appeal. But then it's better just at the moment. We just need to let the HMRC know, write a letter, or just call them, say your company is dormant. Then this is not required. At least have this. But then the other route is if you don't want to tell them, or if you think later on your company will be active again, then you can just file the corporation tax. Of course, you put everything at zero. So we call it a new submission. Okay, so that's basically something you need to be aware. And if your company was previously VAT registered, then that doesn't mean when your company is inactive, you don't file the VAT return at all. Again, you still have to file quarterly VAT return, except you put everything at zero in every boxes. So that's an obligation. So minimum filing is still required. And the other thing you might ignored, or perhaps your accountant has been doing that with you, perhaps you're not aware. If your company was previously you've been taking salary yourself, or you have your spouse in the company and who's on the payroll, and if you're registered as employer and you haven't deregistered that, so what will happen is you still need to file the new PAYE submission as well. So that doesn't mean when your company is dormant and you don't take any payroll, like a salary, and then at this time you don't, you just ignore it. You still have to file the new submission, because payroll submission nowadays is required every month or every pay period. So that's even if everything is new, you still have to do it. Okay, so overall, at the moment, from confirmation statements, company accounts, and VAT and PAYE, all these HMRC obligation. So if your company is dormant, it doesn't mean you have to leave it completely. That just means you will file everything, but then except you will tick most of the boxes as zero. Okay, so basically still things need to be done when your company is in the sleeping mode. Okay, so some people might ask, what if what happens with your self-assessment? Well, that's really due to the personal circumstances. But again, if you think your company is dormant and you don't have any dividend income to declare, and everything is go through PAYE, you believe you don't need to file the self-assessment, it's better let HMRC know. So basically, better let them know than rather than just leave it completely and then later on they will send you, cause some hassle or some misunderstanding. So yeah, but of course, if you have other personal income, like you have rental property, that are irrelevant to your company, or some other income you have to declare as in the self-assessment, then still you have that obligation. So that's still important. Okay. So finally, for some people, they might think, especially for those who gone umbrella or gone PAYE completely, and they don't think they will ever use a company again. In order to reduce the hassle of having to take this responsibility, like do the new filing, then they might decide to eventually close down the company. So basically, for most contractors, their final business assets, the net assets, is less than 25,000. Then for most of them, they qualify for the striking off process. So I think do make sure you check with Companies House that if you qualify for the striking off process. But if you have any other issue, like you still have a payment arrangement with the creditors, then you might not qualify for that. So you might need to go through the a liquidator, let them to deal with this, close down the company for you. So that's a different thing. That's a lot more detailed and a more complicated issue. But if your company qualify for striking off, basically there's a striking off application to Companies House, and then it need to be signed by most of the directors. And of course, before you do that, you need to deregister all the VAT, PAYE, make sure all the obligation, even if that's new filing, the final VAT or PAYE or any company tax obligation need to be fulfilled, and all the debts paid, especially HMRC debt. Okay, all the debts paid, and then go ahead, apply to the Companies House with the striking off. And then your company normally will be dissolved within 2 months' time. But then again, you will need to, if you all the business assets like your bank account, you do need to close it down before your company is dissolved, because if you don't do it, if you still have money in the company and then you don't close down the business account, but then your company is dissolved, all the business assets goes to the Crown. That doesn't automatically go to you, so you end up losing the money. So make sure you deal with all the assets, all the money, the bank account before it is dissolved. Okay, so that's just a bit blurb. Of course, striking off probably the most straightforward thing, straightforward method when it comes to close down the company completely. But then if your company circumstances is more complicated, then you might need to speak to the closing down process might need to be dealt with the liquidator. Okay, so these are some critical issues. Of course, these probably more specific for the people who are caught by IR35, and then you move on to the umbrella company, and in the meantime your company is inactive. So whatever decisions you want to make, either leave it dormant or you want to close it down completely, then these are the things you need to look out for. Of course, lots of people at the moment are asking questions about the dormant company or closing down the company. Then these are the basic information, like very generic. But then if you need some more specific, like tailored advice that's personal to you, just be free to speak to me or personal email me. Okay, so I hope that's useful. But of course, there's another scenario if you've been caught by IR35, and then the fee payer, the end client or the agency paid into a company after the tax is deducted, then that's another scenario. So we will cover it in a separate session next week. Okay, so and of course, if you have expenses in that scenario, how you can claim it, what you can claim or what you cannot claim within the new regime, then we will cover that in detail in the next session. Okay, so I hope you find this session useful. As said, if you are watching YouTube, via the YouTube, then be free to subscribe our channel, and we'll have regular video updates. All our Q&A Monday episode will be on there, and sometimes we might have some smaller bite-sized advice or tax video. Then hopefully that will be useful for you. And of course, the other thing is we also have a private Facebook group. That is called Tax Deductible Lifestyle Tribe. So what's specific for that is we have more like a personal insight, more in-depth information, and also have our specific like private Q&A that's normally held on Wednesday. And of course, if you have any specific questions in the group, then I will answer them live every Wednesday. So that's more specific to you guys. And in addition, we have our panel of experts in there, like we have financial advisor or business advisor who can help you with the wealth building or cash flow to help you to earn more money, or just improve your lifestyle in general. Okay, so so if you are in that group, that will be you are able to connect with those people, and I often encourage them to post their tips as well, so you can benefit from them as well. Okay, so I hope you find this useful. If you do have any further questions, please be free to get in touch with me. And otherwise, thank you for being here. And I shall see you next week very, very soon. So this is Hannah from Tax Deductible Lifestyle. My company is called Exceptional Consultancy. If you do have any specific questions about tax, then be free to get in touch. Okay, so have a nice evening. Bye now.